Welcome back. We are here with Mark from Morgan Creek Capital. Mark, how are you doing?
Doing great, doing great. Thanks for having me on the show and look forward to the conversation.
Of course, I'm excited to chat with you. Your energy is amazing. So you started Morgan Creek Capital back in 2004.
Right.
How did all this start for you?
So I don't do short well, but I will try.
Yeah.
So it's pretty simple. I came out of school not knowing what I wanted to do. Came out of business school, took a job at the insurance company. The guy who was doing investments retired, so I started doing investments, and one thing led to another. And I went to an equity firm. Then I went back to the alma mater at Notre Dame, and I learned the endowment model. I was the number two guy, always gonna be the number two guy. Number one guy and I were a year apart. He was gonna stay forever. So I left, came down to North Carolina and ran the endowment there from 98 to '04. And in '02, started getting approached by families saying, hey, you guys did really well during the crash. Can you help us out? I'm like, well, I don't really want to work for one family, but
Yeah.
if we could work for multiple families, great. So we created one of the first outsourced CIO firms back in '04 to bring the endowment model of investing to other investors. And that's how I got started. And I did that, what I refer to as chapter two of my life for 15 odd years. Chapter one, I worked for not-for-profits. Chapter two, built a nice little for-profit asset management business. And then 5 years ago, started Morgan Creek Digital, and now I'm a late in life venture capitalist, and that's my chapter three. And then chapter four, I'll teach sometime later.
I love that. That's awesome. And when it comes to the human being behind the business that you guys are investing in, what are some soft skills that you look for?
That's such a great question. And
Thank
I'm
you.
a big guy that questions are way more important than answers. I'm full of answers, but the key is asking great questions. And that is a great question. Look, when you're thinking about investing, that's all I've done for 35 years. And I had the best job in the world. Literally, I got paid to travel around the world and talk to the smartest people in the world about how to invest. It was amazing. I talked to Nobel laureates. I've talked to every hedge fund manager you can imagine, from George Soros to Stan Druckenmiller to Julian Robertson to Michael Steinhardt to everybody, Paul Tudor Jones, and a couple things kind of come out in that. One is competitiveness. Man, in this business, you need to be competitive. And I like to ask people the question, do you love to win or do you hate to lose? It says they're the same. Like, no, they're actually not. There's a subtle difference. And I'm not necessarily saying one is better or worse. It's kind of like, are you a value investor or a growth investor? I'm a value guy. I'm genetically a value guy. And that's actually a problem sometimes because I can't buy the super crazy valuation stories like Nvidia and Tesla and other things. Late days, early days, like we were early investors in Tesla, early investors in Nvidia. We sold way too early because I'm a value guy. Doesn't mean that's right. That's just who I am. And so that competitiveness, number one. Second, actually maybe first, integrity. If you don't have integrity, personal integrity, like one of my mentors, Julian Robertson, they had this line that he said all the time: never fudge the numbers. And we've all been there. Someone asks you a question, you don't really know the idea, and you kind of make it up. Or you want to paint a rosier picture, so you kind of color the numbers the way. No. Never fudge the numbers. Personal integrity. So competitiveness, integrity, and then for me, the really thing that matters, and it goes back to why questions are better than answers, is intellectual curiosity. Not intellect like IQ, but the insatiable curiosity to learn and to be a lifelong learner and to always want to explore new ideas. Those are probably my big three.
I love that, especially the integrity one. I really, really like that one. And you also mentioned the endowment method, and you are a huge advocate for that. Why do you think this style, like, um, of investing is so important?
It's funny. I say this all the time, that it's kind of funny that it's called the endowment model. It's a little bit of a misnomer. Yes, Cambridge Associates made it famous at Yale and Harvard and the other endowments, but really every sophisticated pool of capital for a very long time has used this model. And what is this model? Well, what's labeled the endowment model has really four characteristics. One is a long time horizon. And the advantage of a long time horizon is you can do things that other people can't do. Like if you need your money next year to buy a house, your options are very limited because the volatility will really hurt your chances if you need to buy the house. So cash or fixed rate bonds. And the longer your time horizon, the more volatility you can stand, and therefore the higher return you get because volatility and return are inextricably linked. Second, and what that means is you're going to have a high equity weighting, but not just stocks, equity of all kinds. So public equity, private equity, real estate equity, commodity equity, all the things that pay you for being an owner as opposed to a loaner. If you want low volatility and low risk, you're a loaner. You loan people money. If you want higher volatility, higher return, but higher risk, you're an owner. So that's first. Second is a value bias. Now, what does that mean? Well, it means that you like to buy things below their fair value, right? Just simple idea. And part of that is it's logical from an academic perspective. If you think about the fair value of an asset or the discounted stream of future cash flows of an asset, if I could buy a dollar for 85 cents, seems like a good deal.
Yeah.
Paying $1.20 for a dollar can also be a good deal, but you have to be growing really fast to make that work. And there are certainly points at which the value discipline can break down. You can have what's called the value trap. A company can be so bad that no matter how great the price is, it's still a bad business going away. And conversely, if you pay too much for a dollar, you might not be able to grow fast enough to make it work. So third is a constant rebalancing philosophy. Endowments, different than individuals, different than shorter duration groups of pools of capital, they're in this stay rich business, right? And so if you think about getting rich or staying rich, all wealth, all great fortunes came from concentration. A concentrated stock position, concentrated bond position, concentrated real estate position, concentrated private business. The problem is all small fortunes also came from concentration. How to create a small fortune? Start with a large one and stay concentrated and be wrong. Because the key to success in concentration is you have to be concentrated and right. We've all heard about Apple started in the garage. We don't hear about the 99 companies that went away because history is written by the winners. So this idea that diversification keeps you rich, endowments, pensions, wealthy families, multi-generational families, you're already rich. You're not in the get rich business. You're in the stay rich business. And so that's diversification and rebalancing. And then the last is a predilection toward the illiquidity premium, meaning private investments, particularly venture capital, or as I like to call it, innovation as an asset class. And so you think about there's only four ways to make money. Of all the things that we do in the world, there's only four ways to make money. If you stay in the risk-free rate, you actually don't make any money because any return you get gets eaten up by inflation. That's why it's called risk-free, because you just stay the same. You can take credit risk. You can buy a bond, and if they don't pay you back, you can sue, so you don't make very much money. You can buy an equity. That's an equity risk premium, and you get paid about 7% above risk-free. That's pretty good. You can buy an illiquid asset, private equity, private real estate, private energy, private debt. You get another 500 basis points of premium. And then the fourth way is leverage, which is just a tool. Sometimes it works, sometimes it doesn't. Problem with leverage, it can never make a bad investment good. It can and sometimes does make a good investment bad because you're forced to sell at the wrong price. So that illiquidity premium is something the endowments, multi-generational families, pensions can take advantage of because all of us as individuals, sadly, I mean, I'm actually in Tulsa for my father-in-law's funeral. We're all mortal. We're all going to pass from this earth. And so we have a predilection toward liquidity that a multi-generational family or a permanent life endowment or foundation doesn't. And we who need the liquidity will pay a little bit to get that liquidity provided to us by endowments, foundations, et cetera.
I like that. And you also became a senior director of investments at the University of Notre Dame in 1993. Did this have an impact on your success at Morgan Creek Capital?
Well, for sure. And, I'm wearing green because I love the Irish. Um, and look, Notre Dame was my alma mater. I loved it. I went back there to learn the endowment model of investing, and I think it changed the trajectory of my career. But it also did something that total, I don't want to call it total luck because there was a modicum of skill in that we went out there and we did the work. But we had this great board member on the board at Notre Dame, and he said, "Hey, I want you to do what Yale and Princeton and Stanford and Harvard are doing to get these great returns." And that was this focus on innovation as an asset class and venture capital. So we went out to California, we hung out with the guys at Stanford, and they introduced us to all these famous firms, which at the time in 1993, 94 were not famous, right? Sequoia, Kleiner Perkins, Caulfield Byers, when it was still called Kleiner Perkins, Caulfield Byers, and the last three guys didn't get, erased. Now they just call it Kleiner. And make a long story short, we invested in these venture capital funds, and they invested in the first wave of technology around the internet. And we invested in companies like eBay and Yahoo and Google, all stupid names, we thought. Now they're verbs, right?
Yeah.
And we put 500K in Google. I tell a story all the time. We took out $200 million. Like there should be a quad at Notre Dame called the Google Quad. And that event, light bulb, literally went off. I'm like, I get it. Investing in the infrastructure of these technological waves that started in the 50s with the mainframe computer, and then 68 with the microchip, and 82 with the personal computer, 96 with the internet, 2010 with the mobile net, iPhones, and now 2024 with the truth net, which is where we are today. And the great thing about this is it's exponential. It's not linear, right? We're not adding on linearly, we're adding on exponentially because we're building on better technology every time. So every one of these major innovations, whether it was investing in Google or investing in Facebook and Alibaba around the mobile net, or now investing in Bitcoin and Ethereum and others in the truth net, we just keep getting better and better, which is awesome.
I like that. Yeah, that's very interesting. I mean, like the fact that you guys saw these big brands early on, that's crazy. And you're also huge into giving back to charities. You won an award from Chapel Hill in 2011. Why, or like, what drives you to be so generous and like wanting to help people and give back?
Look, you are kind, and I appreciate you bringing that up. Couple things have been formative. One is really serious, and one is kind of funny, and people laugh when I tell them, but it's actually true. So one is, we all have mentors in our life, and I've been super lucky in my mentors, and I didn't choose them. I wasn't that smart, but I just got so lucky. I went to Notre Dame and I had these great mentors. We had this great board member who was this great investor, and Scott and I learned a lot from him. And then I came down to North Carolina, and Julian Robertson was the largest position in my portfolio that I inherited. And for whatever reason, he took a liking to me, and I could spend a lot of time with him up until his passing a couple of years ago. And Julian was just amazing. He ran the biggest hedge fund of his time, shut it down in 2000, have trained 10% of the long short assets in the world are managed by people who worked for Julian. Andreas Halverson's in the news today. So just an amazing guy. And he taught me a lot of things. But one of the things he taught me was when he set up Tiger, the first thing he did was he set up Tiger Foundation. And he took a percentage of the profits, put it in the foundation, and then had the people that worked for him run the foundation and make the grants. So when I left the university and I started my own business, one of the funny things is I got this email. It said, "Say it ain't so, Julian." And I joke, I don't get a lot of emails from billionaires. That was actually my first one ever. And I said, all right, I'll hit that bid. I'll go see Julian. And I really thought that jokingly I was going to get my Nike shoe deal. And what does that mean? Well, I was quitting the university, and the universities don't pay very well. And like the coach of basketball at UNC makes a couple $100,000. But wait, Mark, he makes $4 million. Well, not from the university. He makes it from television and shoe deal and all the other things. And so I thought Julian was going, hey, Mark, we want you around and we'll give you a shoe deal, meaning they'd pony up to,
Yeah.
keep me. Instead, he puts his arm around me and says, I'm surprised you lasted this long. I like you. I want to work together. Like, I will hit that bid. So I modeled Morgan Creek on Tiger. And so the second thing I did after I started Morgan Creek Capital in '04 is I set up Morgan Creek Foundation. And so we put 10% of our profits in the foundation every year. And then people in the firm allocate charities. And our big thing is education, early childhood education. And so that's what we believe in. And then the second thing is when I was at Carolina, I hired a guy who was a Moorhead scholar. And then I hired a second one. And then I hired a third one. It turns out these guys were great. When I say guys, I mean guys and gals. They were amazing. And so I looked into it and I found out that John Motley Moorhead has set up this foundation to attract the best talent to UNC. And he endowed this program. And I said, yeah, I want to do that at my alma mater. So my wife and I set up the Mark Yusko Scholars Program at Notre Dame to attract the best students to Notre Dame. And one little humble brag, and this had nothing to do with me, but it's kind of cool. So we've had 10 graduating classes, 4 valedictorians. So
Wow.
the program works. If you identify talent and you bring them into a cohort where they get access to better professors and better programs, they produce great results. And it's worked at UNC. It's worked at Virginia with the Jefferson Scholars, and at Vanderbilt, the Ingram Scholars. So the cohort effect really works.
That's incredible. That is amazing. And when did you join the on-chain monkey community, and why?
This is funny. So I've been buddies with Raoul Paul for a long time, and he invited me to come speak at one of his events, and I got there, and one of the other speakers was Bill Ty, and I've been a big admirer of Bill for a long time. He's an early in life venture capitalist. I'm a late in life venture capitalist, but I was a big admirer of his, and so we were sitting around chatting in the green room after we both gave our talk, and he was telling me about on-chain monkeys, and the thing that and it's interesting that we're recording this on the day of the launch of Karma Token.
Wow.
And this is very important because he was talking about this community that he wanted to create was all about crystallizing and monetizing good karma. And I really believe in that because the second I didn't tell the other funny story. So I said one was good mentors. The other reason that I believe in philanthropy, believe it or not, is I got a fortune cookie once, and it says if you continually give, you will continually have. And it's 100% true. The more I have given in life, the more I have. And it's just the way it is. And so that mantra of good karma and paying it forward just resonated to me. And then he talked about the community and how you could give the rise and give the bananas. I'm like, I want to be in. And like most people, I got busy and I didn't get around to doing the initial mint. But then I just kept in touch, and then I met some of the other people who had been in on the original mint, and I just loved the community. And then there's a woman, Sophia. I'm blanking on Sophia's last name, Vachetto, and Sophia had gotten involved with Amanda Terry, and Amanda had reached out and said, "Hey, we see you're speaking in Vegas. We're gonna be out there. Do you want to get together?" And so we got together. And they talked me through, actually with good things, on how to really get involved. And so I literally sat there with my computer and I hit the bid, and they helped me. Danny helped me pick my first monkey, which I still love to this day. And but the more I got in about the more you give, the more you get. The more I got into the community, the more great interactions I had, the more people I had, the more favors we would do for each other. And so I believe in the ethos. I believe in the power of community. And I believe in this idea of paying forward, which is what karma is real. And I actually believe in karma. I believe you're a good person in life. Good thing. Now, not doesn't always work out the way. We all have to ask ourselves why bad things happen to good people. It does happen, but I do believe that karma is real, and that we can make a positive impact through collective good action.
Yes, yes, I love that. That's really awesome. And speaking of On-Chain Monkey, there are some Satoshi emails going around that are mentioning the On-Chain Monkey. What are your thoughts on like Danny Yang possibly being Satoshi?
Danny is a super talented guy, one of the most talented people in the Bitcoin community there is. Um, Never say never, and he's the type of guy with the humility and the self-effacing who would be very happy to be um, unknown, so to speak. I think there's a sequence of events that probably says he came a little bit after Satoshi himself. I don't want to say himself because I say he, she, or they, but I guess Satoshi did self-identify one time in an email as he, so we have to assume. And I was pretty prone to the multi-person um, group that was Satoshi, and I actually believe that Hal Finney was one of them. God rest his soul. And that's why with the multi-sig, and now you can't move the original million. Look, I don't have any insights. One of my funny
Yeah.
stories in that though is um, Scott Stornetta, who coined the term Bitcoin, right? He and his partner, and not Bitcoin, I'm sorry, blockchain. In 1991, he and his partner Stuart Haber coined the term blockchain, and they're cryptography experts. And long story short, if you read the white paper, in their 8 footnotes in the back, 3 of them are Scott and Stuart's papers. And so people will ask Scott, well, you must know who Satoshi is if he's citing your work. And he starts speaking perfect Japanese because he's married to a Japanese woman. And basically, what he says, because you can't understand unless you speak Japanese,
Yeah.
basically what he's saying is, if you could understand me, which you probably can't, I'm telling you that I might know who Satoshi is, but if I did, do you think I'd really tell you? I always got a kick out of that. And the fact that Scott speaks Japanese, that's interesting. So people have asked him, "Are you Satoshi?" And he always does the same thing. So I think there are a lot of questions. My favorite uh, is if you Google, and Aaron, I'm using company we invested in
Yeah.
1995 as a verb. Right, it's become a verb. If you Google Satoshi Nakamoto, what you get is Satoshi means intelligence, and Nakamoto means central. It's the surname of the families from the central districts. Intelligence Central, that's like way too close to CIA.
Yeah.
So, you know, and to that point, I had this concern. So I asked Scott, I said, is it possible that NSA CIA created this knowing that the dollar was doomed, and that as everybody put their money into it, then they had a backdoor and stole all the money? And Scott looked at me, he's like, never thought of that. No.
Yeah.
Like, that fast? No. He says, well, no. Yes, it's an interesting thought and certainly possible, but here's the problem. The way you're thinking about a backdoor can't exist in Bitcoin because of the air gap. It's like, whew, okay. Now, he didn't dismiss the fact that it still could be CIA, NSA that were the original Satoshi, but he said, no, there's no backdoor. He said, now, the funny part, he said, but with ETH, there could be a backdoor. I'm like, whoa. And so that's a topic for another day. But he wasn't accusing anybody of anything. He was just saying that the way Bitcoin is structured, no backdoors.
Yes. And what would younger Mark say to you if he found out you are insanely successful and are managing over $1 billion?
Younger Mark would laugh hysterically because, look, I say this all the time. My life's a series of happy accidents. I grew up very happy kid in the 70s where you went outside and you played all day and there were no devices, and my parents were not college people. Thankfully, I had a good guidance counselor who sent me to college, but I went down the list. She gave me a list of 10 schools because I had good grades and scores, and I went, Harvard and Yale, East Coast, not going there. Carnegie Mellon, never heard of it, not going there. Emory, don't know where it is, not going there. Heard of Notre Dame, heard of UVA. I wanted to be an architect back then. So it was the top architecture schools. And so I applied to 5 schools. I got in and I just fell in love with Notre Dame. And that's where I went. So, but I didn't have a plan. I never had a plan. I never, and success you can measure in so many different ways. You can measure it by, what you do every day, how happy is your family, how many friends do you have, what do you give back to society. And so I've been very blessed in so many ways. And but I've also been lucky. Now I also do believe Thomas Jefferson said it best. I'm a great believer in luck. Seems the harder I work, the more of it I have around. So I do believe in that. But I was always willing to answer the call. So whether that was to change careers from architecture to business, whether it was to go work for the insurance company because that's the only job that was offered, whether it was to do investing because the guy retired, whether it was to go work at the alma mater, whether it was literally the recruiter called and said, "Hey, there's a job in North Carolina." My wife said, "Take it." I said, "Don't you want to know what it is?" She said, "No, I just want to live in North Carolina." She was right, as usual. And then when the families called, we answered that call. So I've been pretty good about that. And I also think that we make our own success by positive attitude and positive energy, by hard work, by leaning on the right people. I think I've done a pretty good job over the years of knowing who's really good at something, like people like Danny, and getting involved in communities around that, leveraging those resources. But that's a long answer to say. I think young Mark would say, "I didn't expect that, but good for you."
Yes, I have 2 more questions. You were a huge Elvis fan. You saw him in person over 39 years ago. Do you prefer Jailhouse Rock or Blue Suede Shoes?
I'm definitely going Jailhouse Rock, definitely.
I like that.
And
One
my
more.
little guy. So we have a unique family. So our older 2 kids are 34 and 32, and then our caboose is 13, and he was born on the king's birthday, January 8th.
Really?
So that's kind of cool.
Wow, that's awesome. That's awesome. I have one more question. If you could have dinner with 2 people, one person from the past and one person from the present, who would it be and why?
Yeah, the past is easy. In the sense that Leonardo da Vinci, I just think so few people with that breadth of knowledge and interests and art and physics. And so, and there are plenty of amazing people in the path to pick from, and there are no wrong answers, but that would be mine. In the current, it's tough. I mean, there are a lot of great people out there. I probably would lean. See, I can't say Satoshi because we don't know who it is, so we couldn't find
Yeah.
them. That one would be really cool, but can't say that. Um, I I'm going to say something controversial because some people like it. I probably shouldn't name a politician. Um, so maybe I'll name 2. It would either be Bill Clinton or W. Right, diametrically opposed in terms of ideology. Bill Clinton is the most charismatic person I've ever met. I only met him one time. I only met him for like 5 minutes, but I listened to him speak, and by the end, I was like, I'm quitting my job. I'm going to go work for this guy. And I don't even like him for lots of different reasons, but it was amazing. I mean, he was just the most charismatic person I had ever heard. So I would be very interested to have dinner with him and just listen to how he. I don't know how did you become like that?
Yeah.
W, on the other hand, I did not like as president because I didn't think there was. But post president, I've been impressed. I've heard him speak 3 or 4 times, and I think he's become a really very interesting person. So I think either one of those would be fun to have dinner with.
Those are good answers. People have not named those guests yet. So that's other
Well,
question.
everyone wants to have dinner with Elon, but
Yes.
all you gotta do is read Twitter and you know everything about Elon. So that'd be a way. And people want to have dinner with Buffett, and again, Buffett created the greatest structure the world's ever seen for investing, right? Permanent tax deferral, leveraged using other people's money through the insurance company.
Yeah.
I've already read about that, so I don't know that I need to hear it again. But I really am interested in charisma, right? Personal charisma, because that doesn't mean you're necessarily the most intelligent person. It doesn't necessarily mean you're the best looking or handsomest person, male or female, or most beautiful. But charisma is something that really is interesting to me. So
I would say you have a lot of charisma as well. I mean, you jumped on the call, like his energy is amazing. That's all the questions I have. How can people find you, and what is one thing that you would want to leave people with?
So I'm easy to find. So I'm all over the internet. So I do lots of podcasts, and we have a YouTube channel called Around the World with Yusko. We have a couple different podcasts. We have Hedged with a capital D. We have Digital Currents, which we just released a new weekly series last Saturday. And I'm on Twitter at Mark Yusko, MarkYusko. I'm on there too much, as my wife would tell you. I think the thing I would leave people with is, it's kind of like in the advice to your younger self. So one, read more, write more. Don't be afraid to pursue true passions, and find that thing that you are passionate about. Find that thing that gives you purpose, and try to integrate it into your life. Because they say if you love what you do, you never work a day. So I'm having more fun today, right, at 60 years old than I've ever had in my life. And that's not a condemnation of the previous 40 years of my career. I loved my career. I loved every step of it. I loved being a little grunt at the insurance company. I loved working at the alma mater. I loved building Morgan Creek. But being a venture capitalist and working with young, passionate people who literally want to change the world and might do it is just so unbelievable. And so to be able to be engaged in that on a day-to-day basis, to be able, and that would be the last thing I'll give. Engage in everything you do. Engage in your personal relationships. Pick up the phone and call your mom and dad. Pick up the phone and call your friends. Respond to the people on Twitter or Facebook. Julian Robertson had this great thing. He was at this big event. He said, all right, everybody stand up. Okay. Whoever has a Facebook account, remain standing. Pretty much the whole room stayed standing. Says, all right, everyone who has made a 4-line post or greater in the past week, stay standing. 90% of the people sat down. Said, you are the community. All the rest of y'all are stalkers. Engage. Actually engage in all the things that you do, and bring that passion and energy to them, and then life gets better.
Well, Mark, thank you so much for coming on. It was a great conversation, and I appreciate it a lot. Thank you.
No, thank you. Thanks for all the great questions. I said questions are way better than answers, and I appreciate the opportunity to have a real conversation.